You're listening to Investor Insights Decoded, the podcast where our hosts, Michael Grant and Julia Foster, break down the most impactful memos from the world of investing. Today, we'll be exploring Howard Marks's memo, How's the Market?, written on the 1st of April, 1999. Let's dive into the timeless insights that continue to influence investors today. And if you're enjoying the content, don't forget to like, subscribe, and share your thoughts in the comments. Your support helps us bring more valuable insights to the investing community. Now, let's get started. All right, so let's jump into a deep dive today and look back at some serious market wisdom.
That's good.
And we're going to be taking a look at a memo from Howard Marks.
Okay.
He's, the kind of legendary investor from Oak Tree Capital.
Yeah.
And he's pretty famous for his insights into the market.
Mm-hmm.
He's got these memos, these letters he writes that people just devour.
Yeah, they're fantastic.
So this one we're looking at today is from April 15th, 1999.
Wow.
Right at the peak of the dot-com bubble.
Yeah.
Which is pretty interesting to look back on now.
Very much so.
And see what he had to say then.
Mm-hmm.
And it's actually really relevant to today.
I was going to say, it's kind of scary how relevant a lot of his stuff still is.
Oh, yeah.
Even though it's from, 25 years ago almost?
Yeah.
It's crazy.
Yeah. So one of the things he pointed out was, so picture this, it's April 5th, 1999.
Okay.
The Dow is just soaring.
Right.
Like it's setting records.
Everyone thinks it's a great day.
Everyone's celebrating. It's fantastic.
But
Marx points out something really interesting.
Okay.
Most stocks were actually down.
Oh, really?
Yeah. More stocks had hit new 52-week lows than highs.
So it was like just those big names.
Kind of bizarre, right? For such a, strong day.
Yeah. Very strange.
So what he pointed out is this is a classic example of what he calls narrow market leadership.
Okay.
Where gains are concentrated in just a small number of stocks.
And so usually
The big names, right?
The exciting ones.
The exciting ones.
Yeah.
He actually pointed out that just 18 stocks accounted for the entire 5% rise.
Wow.
In the S&P 500 in the first quarter of 99.
So the rest were?
And the other 482.
Basically flatlining?
Yeah, just those 18.
They're crazy, right?
Yeah, dragging it up.
So I guess the question is, what's the problem with that? Isn't it good that some companies are doing so incredibly well?
Well, it can be a good thing.
Right.
It shows that there is enthusiasm and belief in those specific companies.
But it's also a sign that the market might be getting a little...
Fragile.
Fragile, yeah. Or
top-heavy.
Top-heavy, there you go. That's a good one.
Overly optimistic.
Yeah.
In just one little segment of the market, right?
Exactly.
And
yeah.
we've seen how that can go.
Oh, yeah.
Historically.
Not well.
Yeah, after the dot-com bubble.
It's a good time to remind yourself,
when those high-flying stocks
as an investor,
started to falter.
Are you diversified?
The whole market tanked?
Or are you overly concentrated in those few hot stocks?
Right. So it's a good time to take a look at your own portfolio.
Yeah, exactly.
You're like, okay.
Am I playing with fire here?
Yeah. Am I too concentrated?
Or am I spread out?
Am I diversified?
Exactly, yeah.
It's easy to get caught up, right?
Totally.
In the excitement.
Oh, yeah. FOMO's real.
Of a booming market.
Very real.
But you got to kind of take a step back.
Yeah.
And look at the bigger picture.
Look at the whole thing, not just...
What are the underlying trends? Not just the headlines.
Exactly.
So speaking of those hot stocks of 1999.
Oh, yeah.
We got to talk about the dot-com mania.
We got to talk about the dot-coms.
Marx talks about Yahoo.
Yeah.
Gaining a massive 22% in a single day.
In one day.
And Amazon jumping 9%.
Crazy.
Remember, this is when AOL
yeah.
surpassed IBM.
Wow, yeah, I forgot about that.
In market value.
That's crazy.
It's insane.
Yeah.
So these were really wild times.
Definitely.
And the internet obviously revolutionized the world.
Yeah, I mean
that's not even a question.
Of course.
But the valuations of some of these companies
that's totally detached.
Were a little out there.
From reality.
He uses the example of Priceline.com.
Okay.
Which went public with a valuation of $10 billion.
$10 billion?
$10 billion.
What were they doing?
What was so special about Priceline?
Yeah.
I mean, they had this kind of innovative idea of letting people bid for airline tickets online.
Oh, yeah, right. Yeah.
Which, okay, that's cool.
Yeah.
But they were losing money.
Ah.
And they'd only sold about $35 million worth of tickets in their first year.
So
that $10 billion valuation
yeah.
was actually higher
Wow.
than the combined worth of like
Okay.
United, Northwest, and Continental.
Wow, that's a good example.
Actual like big airlines.
Yeah. It's crazy.
That's insane.
It's like people were just throwing money at anything with the .com
Right.
at the end of its name.
Just like, that's the future. Gotta be in it.
Yeah.
Yeah.
Which
That's-
classic example, I mean, some of those companies did go on to become giants,
Yeah.
but a lot of them
Right. Most of them
crashed and burned.
didn't do so well.
So how do we, as investors,
Yeah.
avoid falling into that same trap today?
Right. Well, I think like one of the key things is understanding the difference between speculation and investment.
Okay.
Right. So like speculation
Yeah.
is betting on price movements.
Okay.
It's hype. It's sentiment.
Okay.
Investment is about buying assets with a solid foundation. So you're looking at the actual
A business.
company,
Right. Exactly.
their performance, what their future might be,
Right.
and their price reflects that.
Exactly. Yeah.
This
Versus.
is just the story.
Yeah. Versus just the story.
Right, exactly.
So it's kind of asking yourself, is this price justified
Yeah.
by the company's actual performance
Is this real or is this hype?
and future potential?
Yeah.
I love that.
And even today, we see some of that,
Oh, yeah.
you know?
Yeah,
So it's still very applicable.
for sure.
Yeah.
So he also pointed out that, so Marx noticed something really interesting about the media coverage of the market back then.
Okay.
You know, like the way they were talking about it,
Yeah.
traditional valuation metrics like price to earnings ratios,
Yeah.
dividend yields.
Right, the fundamentals,
They were barely mentioned.
they weren't talking about
It
it.
was all about the story.
It was all about potential,
Yeah,
right?
the potential.
It was all sizzle, no steak.
Exactly. And that's,
Yeah.
another sign of a bubble, I think.
Lack of focus on fundamentals.
Yeah, exactly.
I mean, are traditional valuation metrics the be-all and end-all?
Not necessarily,
No.
but to completely ignore them,
Yeah,
that's a red flag.
that's a problem.
Yeah, for sure.
So what are some alternatives?
Well, it depends on the industry and the
Right.
specific company,
Right.
but things like revenue growth
Okay.
or customer acquisition costs.
Okay.
For some companies, that might be more relevant. For others, it might be profitability metrics.
Right.
Like, gross margin or
Yeah.
operating cash flow.
Got it.
It's
not one size fits all.
Exactly.
It's looking at what actually drives value for that company.
Right. What are the drivers?
Right. And
Yeah.
not just,
Don't get caught up in the buzzwords.
yeah, buzzword
Or the hype.
or hype or what everyone else is saying.
Exactly.
Like, do your own research.
Yeah, understand it.
Understand what's going on.
Yeah.
All right, so we've talked about narrow market leadership, the dangers of ignoring valuations.
Okay.
Marx also makes this really insightful observation about how economic news can be twisted to fit the prevailing market narrative,
Oh, yeah.
which is fascinating.
That's a good one.
He noticed that even like seemingly positive economic news could be spun negatively
Right.
and vice versa,
Yeah, depending on what people want to see.
depending on what people want to see,
Yeah.
like what the feeling is at the time.
Exactly.
He talks about, for instance, economic reports on things like unemployment,
Right.
wage growth,
Yeah.
job creation.
Uh-huh.
Like they could be interpreted both positively and negatively,
Right. It's all about the spin.
depending on the market sentiment.
Yeah, the narrative.
So it's
Yeah.
like people are looking for any reason
Yeah.
to justify their bullishness,
They're trying to fit it in,
even if it means
Frim-
their worldview is
distorting the facts a little bit.
totally.
Right.
He actually mentions this classic New Yorker cartoon.
Oh, I love those New Yorker cartoons.
I know, right?
Yeah.
That perfectly illustrates this.
Okay.
It shows the market reacting erratically to interest rate news,
Right.
going up or down,
Right. Up or down.
based on
Various interpretations.
It's all about the interpretation.
About the same data.
Yeah, it's not about the data.
It's wild.
It's about how you feel about it.
So it's like the data itself doesn't even matter that much.
Well, the data matters, but
It's all about how people perceive it.
how you feel about it.
It's like, so how do investors filter through all that noise
Yeah, that's a good question.
and make sense of the data?
I mean, one thing is,
Yeah.
healthy skepticism
Yeah.
of the media,
Yeah.
what they're saying.
Narratives, right?
Yeah,
Mhm.
the narratives.
And not just,
Be wary of, any overly bullish or bearish
yeah.
interpretations.
Right.
Like, look at the data.
Yeah. See what it says.
Objectively.
Yeah. Be objective about it.
And then,
Consider different viewpoints.
yeah, like there's not just one
There's more than one way to look at it.
way to look at it.
Yeah.
And form your own conclusion.
Your own conclusions, exactly.
Based on all the different information.
A thorough analysis.
So in a way, it's being a contrarian thinker, right?
I think so, yeah.
Questioning the consensus view
Right.
and looking for evidence that might contradict the prevailing narrative.
Yeah, don't just go with what everyone's saying.
Which leads us to one of the most critical themes of Mark's memo,
Okay.
the importance of independent thinking.
Yeah, thinking for yourself.
So this is where it gets really interesting.
Okay.
Marx admits that even he,
Right.
with all his experience and insight, felt kind of out of step
Okay.
with the prevailing bullishness of 1999.
Right.
He saw the warning signs.
He's like, this isn't right.
But he knew that being too far ahead of your time is basically the same as being wrong.
Right. Yeah.
It's indistinguishable.
Yeah,
It's a great line.
it is.
So how do you deal with that?
That's the question, right?
How do you balance that conviction with the risk of being premature?
Exactly.
Like, oh, I was right, but I was wrong.
Yeah.
Because I was too early.
Too early.
You know?
Yeah.
It's like,
Yeah, I don't know if there's an easy answer to that.
no easy answers in investing, right?
No, there isn't. Even the best get it wrong sometimes.
Yeah.
But I think, like, what Marx highlights is, patience.
Okay.
Discipline.
Yeah.
And the long-term mindset.
So it's not about timing the market perfectly.
No, you're never going to time it perfectly.
Right. That's impossible.
No.
Especially for us mere mortals.
Right.
Right.
Yeah.
Like, the pros get it wrong.
Yeah, everyone gets it wrong.
So it's more about recognizing when things are out of whack, when valuations are like,
detached from reality.
yeah, just totally out there
Yeah.
and being willing to chart your own course.
Even when everyone else is doing something else.
Even when it feels uncomfortable
Yeah.
to be different.
Yeah, exactly.
So it's almost like you've got to have this framework
Right.
or this mental model.
This way of thinking.
Yeah, that helps you spot those moments of irrationality.
Yeah, and maybe you won't catch
Even if
the exact top or bottom.
you can't pinpoint the exact timing,
But you'll be somewhere in the ballpark.
you'll be close enough.
Yeah, hopefully.
Right.
Yeah.
And that's where his value investing philosophy comes in.
Right.
He focuses on buying assets when they're trading below their intrinsic worth.
Right, their actual worth.
Yeah, not what the market
Not what people think.
thinks they're worth,
Yeah, exactly.
but what they're actually worth,
Right.
which takes a lot of work.
It takes work.
Right.
Yeah.
You got to really dig deep,
You got to understand the company.
understand their financial statements,
Yeah.
their business model.
What's their competitive landscape?
Yeah, all that stuff.
Yeah, a lot of research.
So it's going beyond the hype
beyond the hype,
and the buzzwords.
beyond the story.
And really figuring out what a company is worth.
What is this thing actually worth?
And sometimes that means sitting on the sidelines.
Yeah.
Even when
everyone else is making money.
everyone else is making a killing.
It's tough.
Right.
Yeah.
And he actually admits that.
He did that right.
He wasn't fully invested in 1999
Yeah.
because
He's like, I don't see anything that I like.
he's like, I can't find anything that I like at a price I want to pay.
Yeah.
Which I can imagine takes
That's
a
disappointing.
lot of willpower.
Yeah.
Especially when everyone around you
Yeah. You feel like you're missing out.
is like, oh, I just made you're 100%.
Right.
It's like, oh, my portfolio's up 500%.
Yeah. It's tough.
And you're just like sitting there.
Right.
But
But it's a marathon, not a sprint.
It's a marathon, not a sprint.
Right.
And the goal is to build wealth
In the long run.
over the long haul,
Yeah.
not to chase
Not trying to get rich quick.
quick profits.
Yeah.
Right.
Exactly.
Which means having that patience to wait for the right opportunities.
Yeah. And the right prices.
Right. So being a contrarian
Yeah.
isn't just about being different for the sake of it.
Right.
Right.
Yeah.
It's about having
A process.
a well-defined
Yeah.
investment approach.
Sticking to your guns.
Sticking to your guns.
Yeah.
Being willing to see things from a different perspective.
Yeah. See things differently.
So he also talks about this really interesting company,
Okay.
Computer Outsourcing Services, Inc.
Oh, yeah. I was just reading about that.
Okay, so
What a great example.
what happened with them?
Well, this company, they went public, and then in the next 6 years, they tripled their revenue and quadrupled their earnings.
Wow.
I mean, that's incredible, right?
Yeah, that's phenomenal.
Yeah.
But their stock price only went up by 60%,
Which is nothing compared to the NASDAQ.
which is nothing compared to the NASDAQ.
Yeah, which was up like,
Thousands of
like,
percent.
I don't even know how much. It was crazy.
I think they were totally ignored.
Just ignored.
Yeah,
They weren't a .com.
because they didn't have that .com
They weren't exciting.
sizzle.
Yeah, they didn't have the story.
They weren't exciting, right?
Yeah,
And it wasn't just the stock price, right?
I know.
They had trouble hiring people.
People
The
want.
.com option.
Everyone wanted options in these hot tech stocks.
Yeah,
Right.
exactly.
Yeah.
No one wanted boring old computer outsourcing services.
Yeah, even their acquisition bids were being ignored.
They were trying to buy other companies.
Yeah.
No one wanted to be bought by them.
They weren't seen as the sexy company
Yeah, exactly.
to work for.
No one wants to work for the boring company.
Right.
Right.
So it's like market sentiment
Yeah.
really impacts a company.
It goes beyond the stock price.
Yeah, beyond the stock price.
It affects their ability to hire,
To make deals.
to do deals,
Yeah, everything.
to operate.
Yeah,
It's kind of like a self-fulfilling prophecy
I think so.
in a way.
Yeah.
Right.
Yeah, it's like when investors get excited about something,
Yeah.
they just pour money into it,
Mm.
and it just keeps going up.
And
Then when they get bored,
yeah, when they get bored,
they leave.
it's like a ghost town.
Yeah,
Even if the company
even if the fundamentals are still good.
is still doing well.
Yeah.
So,
How do you, as an investor, avoid getting caught in that?
yeah, how do you find those companies?
It goes back to what we were saying,
Yeah.
having a philosophy,
Framework.
an understanding of valuation,
Sticking to your principles.
sticking to your guns.
Not being afraid to go against the grain.
Don't be afraid to be different.
Right.
Yeah.
Mm.
Sometimes the best investments are the ones that no one's looking at.
The best investments are the ones that no one's looking at.
Yeah. The unloved one?
The undervalued ones.
It's having the courage to be different.
Yeah. Think for yourself.
Think independently.
Trust your own judgment.
And trust your own judgment.
Yeah.
This has been awesome.
This is fun.
It's so fascinating to look back at this and be like,
I know, it's like history repeating itself.
like, oh my gosh, this is so relevant to today.
Yeah. Yeah. But anyway.
We've got to move on
Yeah.
to part two
Good too.
of our deep dive
Well, that's
into
good.
Howard Marks' 1999 memo.
Me too.
So we'll see you there.
See you there. Welcome back.
Okay, so we were talking about contrarian thinking.
Yeah.
And how tricky it can be to go against the crowd, even when you see things getting out of hand.
Right.
Like, sometimes it feels like everyone's making money but you.
Everyone's getting rich but you.
Yeah, and you're like, am I missing something?
Yeah. Am I the dumb one?
Right.
Yeah.
And Marx himself faced that dilemma back in 99. Yeah, he was like, I'm seeing all this crazy stuff, but,
Right.
I don't want to be wrong.
He saw the excesses of the dot-com bubble.
Yeah.
But he also knew that calling a top too early
Right.
can be just as bad as missing it altogether.
Yeah, it's that fine line.
And he has that great line, being too far ahead of your time is indistinguishable from being wrong.
It's so true.
I love that.
It's such a good line.
So how do you deal with that?
Yeah.
That uncertainty?
It's tough.
Right. Like, how do you balance conviction
Yeah.
with the risk of being premature?
I don't know.
I mean.
If I had a good answer to that, I'd be a billionaire.
Right.
But I think,
Yeah.
Marx highlights a few things.
Yeah.
Patience,
Discipline.
long-term mindset.
So it's not about timing the market perfectly.
No one can do that.
Okay.
You're never going to call the top.
Right. It's not like,
And the bottom.
okay, this is the day.
Yeah.
This is it. We're
Right.
at the peak.
Yeah, no one knows that.
No one knows that.
You can't.
It's more about recognizing those moments of irrationality.
Yeah, like when it's just detached from reality.
Just out of whack.
Yeah.
And being willing
You have to chart your own course.
even when it feels uncomfortable,
Yeah, exactly.
to be different.
Yeah, be different.
It's like having this framework, right?
Okay.
This mental model
Like a way of thinking.
that helps you
Yeah.
spot these
Spot the craziness.
moments of craziness.
Yeah, exactly.
And maybe you don't catch the exact top or bottom.
Right. You be close.
You'll be close enough, right?
Hopefully. Yeah.
And that's where I think his value investing philosophy really comes in.
Right.
He focuses on buying assets
Yeah.
when they're trading below their intrinsic worth.
Their actual worth.
Yeah, not what the market thinks
Yeah.
they're worth,
Not the hype, not the story.
but what they're actually worth.
Right. What are the fundamentals?
Which takes a lot of work.
It does.
It takes work to do that.
Yeah.
To really dig deep, understand the company.
Yeah.
Look at the financials, their business model, their competitive landscape.
Do your research.
You got to go beyond the hype
Yeah.
and the buzzwords.
Yeah.
And figure out what's really going on.
What is this thing actually worth?
Yeah, and sometimes
Sometimes it's better just to sit on the sidelines.
you just got to sit on the sidelines.
Yeah.
Even when
Even when everyone else is getting rich.
it feels like everyone else is getting rich.
Yeah, it's tough.
He admits he wasn't fully invested in 1999.
Right. He's like, I don't see anything that I like.
He's like, I can't find anything I want to buy at a price I'm willing to pay.
Yeah.
I mean, I can only imagine the willpower that takes
Oh, I know.
to sit there
Yeah.
and watch everyone around you.
And like your friends are calling you and they're like,
making a killing.
I just made 100% on this stock.
Right. And you're like,
oh, good for you.
I'm glad your portfolio is up 500%.
Yeah, I'm just going to sit here with my cash.
Right. But it's hard.
Right.
It's a marathon, not a sprint.
Right. Exactly.
And the goal
Is to build wealth.
Is to build wealth
In the long run.
over the long haul.
Yeah.
Not to chase quick profits.
Right. Don't try to get rich quick.
Right.
Yeah.
And that means being patient,
Be patient.
waiting for the right opportunities.
Yeah, wait for the right price.
Okay, so being a contrarian,
Mm-hmm.
it's not just about being different for the sake of it.
Right.
It's about having a well-defined investment approach.
A process.
Yeah.
Yeah.
Sticking to your guns.
Sticking to your guns.
Being willing to see things differently.
Yeah.
So Marx also talks about this really interesting company.
Oh, computer outsourcing service.
Computer Outsourcing Services, Inc.
Yeah, that's a classic example.
So what happened with them?
Well, they went public, and then over the next 6 years, they tripled their revenue and quadrupled their earnings.
That's phenomenal.
No, it's incredible.
Like amazing performance. But their stock price only went up by 60%.
Yeah, which is nothing compared to what the NASDAQ was doing.
Right, the NASDAQ was up thousands of percent.
It was just going crazy.
It's like they were totally ignored.
Completely ignored. Like,
Yeah.
who are these guys?
They didn't have the .com.
Yeah, they weren't exciting.
They weren't the exciting story.
Yeah.
And it wasn't just the stock price.
No, it affected their whole business.
Right. They had trouble hiring people
Everyone wanted...
because everyone wanted to work for a .com.
Yeah, they wanted those options.
And get those stock options.
Yeah, the sweet, sweet options.
Right.
Yeah.
And their acquisition bids were being ignored.
Right. They were like,
Because-
okay, we want to buy you.
They weren't seen as the
Oh, thank you.
sexy company
Yeah.
to work for.
Yeah, they weren't cool.
So it's like market sentiment
Yeah.
can really impact a company.
Beyond just their stock price.
It affects their ability to hire,
To make deals.
to grow.
To operate.
Yeah. It's kind of like a self-fulfilling prophecy
Totally.
in a way.
Yeah, you get this momentum.
Right.
And it just keeps going.
Yeah, either positive or
And
negative.
then just feeds on itself.
So how do you,
How do you avoid that?
as an investor, avoid getting caught in that?
Yeah.
Like, how do you find those companies?
I think it goes back to what we were saying.
Okay.
Having a philosophy,
Right.
a process,
Okay.
understanding valuations.
Sticking to your guns.
Yeah, sticking to your guns.
And not being afraid to go against the grain.
Be different.
Right.
Yeah.
Like, sometimes
The best investments are the ones that no one's looking at.
the best investments are in the companies that no one's paying attention to.
Yeah, the unloved ones.
The undervalued.
Yeah.
It's having the courage to be different.
Yeah. Think for yourself.
Think independently
Trust your own judgment.
and trust your own judgment.
Yeah.
So Marx also talks about how economic data
Oh, yeah.
can be interpreted in different ways,
Right. It's all about the spin.
depending on the overall market sentiment.
Yeah, the narrative.
So he gives this example
Okay.
about how, like, economic reports on unemployment,
Right.
wage growth,
Yeah.
job creation,
Hmm.
like, they can be spun
Positively or negatively.
depending on
People want to hear.
the prevailing narrative.
Yeah.
It's like, it's not enough to just look at the numbers.
You got to understand the context.
Right. You got to understand what people are thinking.
What the mood is.
Right.
Yeah, what's the narrative.
What's the narrative?
Exactly.
He even references that classic New Yorker cartoon
Oh, yeah. I love that one.
that shows the market reacting
Erratically.
to interest rate news. Like,
Doesn't even matter what the news is.
up or down.
Up or down, right.
Doesn't matter what the data says.
Yeah.
It's all about how people are interpreting it.
It's how you feel about it.
So how do we, as investors,
Yeah.
filter through all this noise
All right.
and make sense of the data?
Well, I think, a healthy amount of skepticism
Okay.
when you're reading these reports.
Okay.
Don't just believe everything you read.
Don't just buy into the hype.
Yeah, be critical.
Be critical.
Think
Think about,
for yourself.
yeah, think for yourself.
Right.
Don't just follow the herd.
Look for evidence that contradicts
Yeah.
what everyone else is saying.
What's the other side of the story?
Right, which brings us back to this core theme,
Independent thinking.
the importance of independent thinking.
Yeah.
And Marx admits that even he, with all his experience,
Right.
felt kind of out of step
Yeah.
with the market in 99. He's
Yeah.
like, I see these warning signs,
But I don't want to be wrong.
but being too far ahead of your time
Is the same as being wrong?
is basically the same as being wrong.
Yeah.
So how do you balance that?
Yeah.
That conviction
It's tough.
with
Yeah.
the risk of being wrong.
Because you could be right.
Because you're too early.
But too early.
Right.
Yeah. I mean, there's no easy answers in investing, right?
No, there isn't.
Like, even the best investors
Everyone makes mistakes.
get it wrong sometimes.
Yeah.
But I think what Marx really highlights is this idea of
Patience.
Patience.
Discipline.
and that long-term mindset.
And it's a marathon, not a sprint.
It is a marathon, not a sprint.
Right. Like, it's easy to get caught up
In the short term.
in a short term.
Yeah. The day-to-day.
No, this stock's up 10% today.
Right.
This is amazing.
Yeah. Or it's down 10%.
Right, genius.
Right.
Right.
You panic.
But really,
You got to zoom out.
zoom out
And look
to
at
the
the-
long-term trend.
The bigger picture.
Yeah, what's the story here?
What's the story?
Exactly.
All right. Well, on that note, we're going to move on to part 3
Okay.
of our deep dive
That's cool.
into Howard Marks' 1999 memo.
I'm ready.
Welcome back to the final part of our deep dive into Howard Marks' 1999 memo.
Yeah, this has been a fascinating look back.
And we've covered a lot of ground.
Yeah, we have.
You know, narrow market leadership, the dangers of ignoring valuations,
Investor psychology.
market psychology, all that good stuff.
Right?
So if you had to, like, distill the essence of Mark's message,
Okay.
especially for those who might not have experienced the dot-com era firsthand,
Mm-hmm.
what would be, like, the key takeaways?
Well, one thing that just jumps out at me is that
Yeah.
market cycles are inevitable.
Like, they just happen.
They happen. You can't avoid them.
Right.
You're going to have times of, crazy exuberance.
Euphoria.
Yeah, everyone's excited.
Everyone thinks they're a genius.
Right, exactly.
Right.
And then you're going to have times of, pessimism and despair.
Yeah, when everyone thinks the world is ending.
Right, exactly. The key is to recognize where we are in that cycle
Okay.
and then adjust your strategy accordingly.
So don't get caught up in the hype when markets are hot.
Right.
And don't panic when they crash.
Don't sell everything.
Nice.
Just stay the course.
So it's all about, like,
keep a long-term perspective.
maintaining that long-term perspective.
Yeah,
Right.
right.
And Marx also talks a lot about understanding value.
Right. It's not just about buying things that are going up.
Right. It's not about momentum.
Yeah, it's about buying assets that are worth more than their price.
Okay. So you got to figure out what something's actually worth.
Exactly.
And then if it's trading below that,
that's when you buy.
that's when you buy.
That's the value investor's dream.
Which
Yeah.
takes a lot of work, right?
It does, yeah.
Like, you got to really understand the
You
business.
got to do your research.
You got to look beyond the hype,
Yeah.
right?
Yeah.
And sometimes that means being a contrarian,
Sometimes you got to be different.
which can be uncomfortable.
That could be really uncomfortable,
Especially when
when everyone else is doing something else.
it feels like everyone else is making money.
Yeah, you feel like you're missing out.
And you're just like,
Yeah.
am I the idiot here?
Am I the dumb one? But sometimes
Sometimes the crowd's wrong.
the crowd is wrong, and that's where the opportunities are.
That's where the big money's made.
Exactly.
So Marx also delves into the importance of understanding market psychology,
Oh, yeah, that's a big one.
which is so fascinating.
Yeah,
He points out how even, like, positive economic news
it can be spun.
can be spun negatively
Mhm.
when investors are pessimistic,
Right. It's all about how you feel.
and vice versa, right?
Yeah.
So it's not enough to just look at the numbers.
You got to understand the context.
You got to understand how people are feeling.
What's the narrative?
What's the mood?
Yeah.
So how do we as investors
Right.
avoid letting our emotions
Yeah, that's the question.
get the better of us?
Right.
Like, how do we not get caught up in the euphoria or the panic?
I think it goes back to,
Yeah.
having a philosophy.
Having that framework.
Yeah. Understanding valuations.
So-
Sticking to your process.
Sticking to your guns.
Yeah, and being aware of your biases.
So recognize that, like, we all have biases.
We all have biases. They
Not-
affect our decision.
They can really affect how we make decisions.
Give me time.
Right.
Yeah.
So I think if we want to apply Mark's wisdom to our own investing,
Okay, how do we do that?
the first step is, like, you got to develop a clear investment philosophy.
Okay, what are your goals?
What are your goals? What's your time horizon?
How much risk are you willing to take?
What's your risk tolerance?
Yeah.
Once you have that framework in place,
Yeah.
it's easier to
Make good decisions.
make rational decisions.
Yeah.
Even when the market's going crazy.
Even when everyone's losing their minds.
Right.
Yeah.
And don't forget to do your own research.
Please do your own research.
Don't just rely on headlines or
Or what your friends are saying.
or what some guru on Twitter is saying.
Yeah, exactly.
Dig into the financials.
Understand the business.
Understand the business. Look at the competition.
Yeah, what's the competitive landscape?
And be patient.
Ah, patience is key.
It takes time
Yeah, it takes time.
for those great investments
Yeah, it doesn't happen overnight.
to really play out.
It's a marathon, not a sprint.
So I think the main takeaway
Okay.
from Marx's Memo is that, markets are complex.
They are.
They're constantly evolving.
Yeah.
There are these timeless principles
Right.
that can guide us.
Yeah, if you understand those principles
Right.
and you stick to them,
By understanding those
you
principles,
can do well.
developing that sound investment philosophy,
Yeah.
and sticking to a disciplined approach,
You can reach your goals.
you can navigate the ups and downs
Yeah.
and hopefully reach your financial goals.
Yeah, that's the dream.
Right.
Right.
It's a journey, not a destination.
It is.
There's always going to be challenges.
Oh, yeah.
New opportunities to learn,
Right.
new things to adapt to.
The market's always changing.
Right.
Yeah.
So
And if you're looking to continue learning, Mark's memos and books are awesome.
I highly recommend them.
We'll include some links in the show notes
Yeah, definitely.
for those who want to
Deeper.
dig deeper.
Yeah,
So it's been a pleasure taking this deep dive with you.
likewise.
And remember, stay curious, stay informed,
Yeah.
and happy investing.